What is going on, Alpha Hunters? Hope you guys are doing fantastic today. And yeah, we're seeing a nice little winning Wednesday going on the market. Nice little up day, about 1.5% up right now on the SPY. So we'll take a look around, see what's going on. Still got to do the homework no matter what day it is, no matter if you're up or down. Obviously, I'm down pretty good today, but last week was a whole lot of winning for me. So still got to figure out what is moving. If you do want to adjust positions, get into new positions. Yeah, just need to figure out what the market's doing. So we will take a look under the hood, see if things are continuing to break or if things are starting to get better for the marketplace. If you have questions, as always, feel free to ask. Don't have to spend the whole time listening to me talk. Figure out what you guys want to talk about. All right, I got the SPY here up 1.5%. Hasn't really done much over the past couple hours. First about hour and a half of the trading day, really pretty strong. It was very strong, and yeah, there we go. There you go. That's all you really need to know. We haven't really done much since. It's just kind of been mostly sideways for the past roughly 3 hours. So, all right. Q's roughly the same way. Up a little bit stronger than the SPY. Not much, but just a little bit. IWM up almost 2% on the trading day. And IWM actually had a pretty good day yesterday as well. So, seeing a little bit of that kind of follow through today on the Russell 2000. So Dow Jones up about 1.5% as well. So most of the averages about in that 1.5% up on the day range. IWM actually up 2%. Okay, equal weighted S&P 500 about the same as the S&P 500. So that's also pretty interesting. Kind of makes sense that this would be up a little bit more, right? Seeing those smaller caps up more than the SP or the smaller caps, Russell 2000 up more. So you would expect a little bit on the lower end of the S&P 500, be carrying it a little bit higher. So that makes sense on the equal weighted being a little bit higher than the SPY. Okay, or the RSP higher than the SPY. Dow Transports up about 1.7% today. So kind of interesting. They definitely continued to fall off yesterday. And nice little kind of support level before we had like a real breakout higher back in early November, right before we had this huge breakout higher. This was kind of like the resistance level area, so it's kind of where we pulled into over the past couple of trading sessions. Nice little pop. You're not really seeing the intraday follow through. It was mostly a gap up on the Dow Transports there. So you can just kind of look at that candle compared to like the SPY. SPY has a lot larger, longer intraday buying candle. So just kind of interesting to see that. The VIX though, here's something I want to talk about. VIX falling off. First first not bearish day, but first bullish day we're seeing on the market really since really what was it? The CPI data last Tuesday morning came out. We saw nothing but selling since then. We saw some buying finally come in yesterday, but the market wasn't really. Excuse me, had to sneeze. Market wasn't really anything changed on the trading day. We gapped down a little bit and just got bought up, but ever since last Tuesday morning, man, we've just seen nothing but selling just about every day. So today's the first real day where we've had strong, or at least some buying kind of come in, or at least break this downtrend that we've just been in. Check this hourly. Very nice downtrend. Obviously broke it pretty much yesterday, kind of at least going sideways, and then finally popping somewhat bullish today. Ooh, look at that little bullishness on the top of the hour. All right, the market likes it when I talk. Okay, so, but the VIX, as the market was selling off over last week, beginning of this week, the VIX was just hanging out. It wasn't really doing much. So, what would be really interesting to see here with how much the VIX has fallen off today on any sign of bullishness. It's real funny. What if the VIX comes down and snags this low that we just put in at the beginning of December and then starts to climb? And what if on the same time we snag that low from the December 2nd low on the VIX, what if we snag that low the same time we kind of retest a little bit higher here, maybe just above 390, maybe like that 392 to 394 type zone? What if we retest some of those spots? Because I mean, the current way it looks, I don't. I mean, the SPY in the market is not anywhere close to getting back to that last Tuesday kind of gap up high, and the VIX is really close to kind of getting back down to that December 2nd low. So if the VIX, you just see the VIX kind of retest lower, snag that low about the same time the SPY is retesting at some of these breakdown levels, anywhere between like the 390, yeah, I'd say 390 to 395 makes sense. I don't really want to see it in the upper 390s, like 400. I see some people calling for that. I don't want to see that, but I think it's a little too deep for me. Not to say I'm going to sell out at that point in time, but I'm going to be a lot more cautious at that point in time. But yeah, it would be real interesting to see the market retest higher. And if we just retest into some solid resistance zones at the same time the VIX breaks that December 2nd low, that would be the most interesting, probably the best time to go bearish type play. If that plays out here over the next couple trading sessions, and it might play out next week, right? Next week's going to be a short trading week, a very short trading week. We are going to have, let me look at the SPY real quick. So we're going to have, let's see, Thursday, Friday trading week this week, and then we come back on next Tuesday. I don't know if next Tuesday is going to be a half day. We're going to look at that here over the next hour. It'll be good to kind of know. And obviously we will play the game again Wednesday, Thursday, Friday next week. Okay, and then we go into the long weekend. We'll have the Monday off again. We come back June 3rd. So we have today, Thursday, Friday, and then we got 4 days next week, and then the year's over. Okay, and then we have New Year's, and we're back here on January. So we only got, what is that? 4, 6, 7 trading days left. Okay, 7 counting today, 7 trading days left. We got 4 next week. We got Thursday, Friday, 6, and then today 7. So 6.5 ish, 6 and 2 hours left of the year of 2022 trading days. So yeah, it is rapidly approaching New Year's, at least in the trading calendar. So I know we got about 10 days left for the regular calendar year, but it's going to be interesting to see if we just push high enough to retest some of these levels and the VIX drops and makes that new low. Oh man, that would be just phenomenal. That'd be so phenomenal to see that. Phenomenal. I don't know. All right, enough of that talk. But I just saw the VIX today was just absolutely getting hammered, just getting obliterated. So just kind of interesting to see how that's kind of shaping up. Dollar, a little bit of bullishness today. Nice little upper wick off of a pretty big sell down yesterday. I don't really know. It's starting to get a little too compressed here on the 10 exponential moving average. Like you're not seeing much more breakdowns. Starting to tap into that 10 just a little too much. I would watch out for a nice little bullish pop here on the DXY, the dollar index at least. So I wouldn't be looking to be bearish here on the dollar unless we kind of just get in here and just chop around sideways, and then we just kind of have like the fall through the like 104 or 103.50 type level. But yeah, it's starting to look like it's going to get just a counter trend pop here, retest a little bit higher. The 10-year yield. Okay, so this sucker has been on a pretty good run here the past 3 days, and a nice little consolidation. Looks like just a little lower wick today. Consolidation probably just continues that bullish trend that it's been in. Very nice little pop right over that like double bottom pivot level, right? The W pivot. Kind of retested right into that level today. So real interesting. Yeah, wherever that low was, yeah. I mean, look at that. Just came right down to it. Retested that 3.625 level on the 10-year, and then straight bounce off that. That is really solid. Check out those the 10 2-year, the 10 2-year, man. Look at that, just still climbing, Yeah, the stronger this climbs, the more confident I'm gonna be on being bearish on the market right now. And this thing is really starting to climb. And you know what? We didn't look at that yesterday. We'll go take a look back and kind of how the inversion yield works in bear markets. When you get this inverted, like I mean the neutral. Hold up, turn off log, geez, before it destroys my charts. So here's the neutral line, right? We've been inverted now for a good while, going all the way back to June. So yeah, we've been inverted for a good while, and here it is. Here's the zero line. So the last time we were not inverted was back in July, back on July 5th. That was the day we went inverted, and we fell negative on the 10 and 2-year. I remember when people were calling for, oh my gosh, here comes the recession, just because we flicked inverted back in April. And I said, yeah, you need to, just because I went back and looked, you need a very sustained long inversion for several months before it like really says, hey, when you move back from the inversion side of things, that you get like strong market sell-offs. And it seems like we might have bottomed here. Definitely looking a little stronger on those 10 2-year relationships. GLD saw a very strong pop yesterday, and the news that kind of came out Monday night was the Bank of Japan, and I didn't really even talk about that yesterday, but they had been rock steady on their like 2.5, I guess, interest rate, holding the 10-year yield at the 2.5 interest rate level. Obviously they've had to fight inflation a little too strong, and they raised it a lot. They went from like 2.5 to like almost 4.5, 10% on yields. And JP 10-year yield. No, I don't even know what I pressed. Sorry, pressing wrong buttons, man. Jeez. Yeah, there it is. So obviously you can see then the rates for the 10-year yield from the Japanese government bonds just absolutely skyrocketed here over the past day or two. So that's basically what the news was yesterday. I didn't even talk about that. I kind of forgot to even mention that. But gold, basically, that was why I was going to talk about gold. That basically says that we're going to a period of stagflation, or just not a good period of time for risky assets, I guess. And something that does really good during stagflationary time periods is precious metals. Gold is really good. Silver's probably going to be the best place to kind of hide it out. That's why you saw the SLV actually break the high that it set back on December, 13th? Back on December 13th. But the GLD did not break that high. That's a very interesting telltale sign, right? So the SLV is looking really good here. I still want to see it pull back. And we'll probably see a lot of these things pull back as the market just has a liquidation moment. And it'll probably happen January, February. But look for that to probably happen, here over the next 2 months. SLV, and I'm going to be looking to set up these plays, probably more on the SLV for the next year or so in Q1. I'll be looking to do that. I will set that up. I think it's going to be a solid play. I like how, SLV, GLD also have been on a pretty good run here recently. SLV also had a very solid basing pattern for the past 6 months. Very, very solid, past 6 months, but it had a 4 month or so basing pattern throughout late summer, early fall. But yeah, this is pretty good. Something I'm going to definitely look to play this bullish as we get into Q1. I'm not going to play it bearish. Looking for that kind of rollover. I just want to see wherever it gets to on any kind of market liquidation we get here over the next 3 months. I want to see kind of what levels it gets to, and then probably set up some leap plays on some precious metals. I'm gonna dig it. Just because looking long term on SLV, hasn't really done a whole lot, really since 2013. It was kind of at the lower ends of a channel. Popped pretty good through coming out of COVID. Nice little rollover. So kind of rolled over, kind of retested into the channel that it had a lot through the 2010s. So nice little retest there for the past couple months, popping out of that retest. So any retest we get here over the next couple months, I'm going to be looking to be bullish, and we might just retest right into these lows that it kind of had over the past couple of years before we broke down back in the summer time frame. So yeah, anything in the like the 20 area to 19 area, I'd be looking to be bullish on it. Kind of just going into 2025. I don't know. I don't know if I'd play it for 2024. I think it'd be a little bit close. You're gonna want as much time as possible on this just to kind of see what happens here. But I dig it. I dig it. I dig it for now. Or I don't dig it right now, but I'll dig it here in about the next quarter or so. So we'll take a look at GLD, SLV in Q1. Continue to monitor it for now. HYG, very strong pop here today, but right into the 10 exponential moving average, 10 and the 20. A lot of people like to follow that 20. So yeah, I'd be really careful. Be real careful here on the HYG, especially since we're seeing such a strong pop on the HYG. Not really seeing that so much on the LQD. So we're definitely seeing a risk on day. I can just tell that it's a risk on day. So seeing that kind of a strong move on high yield corporate bonds, we might see just that pop is it, and we might see the continue rollover here in the next couple of days. So it's gonna be really interesting to see how the trading calendar week ends out. Do we see the HYG, now that it retested into those moving averages, kind of come back down, and we'll see what the market does. Does the market slowly push higher into like 390 to 395, and the HYG just kind of hangs out, doesn't do much, just trades sideways, pushes down a little bit? Yeah, we'll next couple of days are going to be a real telltale sign of what's kind of going on in the marketplace. Now we're finally seeing some bullishness. We can see what's moving, where people are liking things, where people are trying to get in bullish, where people are not trying to get in bullish. Apple, obviously, been bearish on this sucker for a while. Got right down into the yearly low type range, but it didn't quite get down there. Didn't quite get to the yearly low yesterday. It got within a point. It got within 1 point of the yearly low. But nice, obviously seeing pretty good bullishness pop today. Obviously, you're going to get a lot of buyers down in the zone. I'm really kind of glad to see this bullishness come in. Because, you just got to start nibbling on all the fish that are going to be all these bottom feeders that are going to be sitting down here. So now that we're starting to nibble, that they're starting to nibble, not that we're starting to nibble, but now that they're starting to nibble on the stock price, it kind of just gets a little bit more of those people buying in. So that once you break through this zone, it's just going to start to move. It's just going to start to move to the next zone. And I think that'll be a pretty big sell-off, especially if AAPL gets through this price level at like 128. If it can get through 128 before the market breaks its yearly low, it's going to be big time. Be big time bearish. Netflix, man. I don't think my option is going to expire in the money this week. So it was kind of a bummer. I was kind of wondering about that Friday last week and Monday this week, as we kind of saw the market continue to sell off pretty good both days, and Netflix did not. Netflix kind of just hung out, was super flat both of those days, and then we gapped down yesterday and just got bought up. And I was like, yeah, I don't think so. I was just kind of thinking about it in my head. It was really a telltale sign on Friday and Monday, so kind of bummer. It's obviously seen a little bit of a follow through. I wonder how much of a lot of this buying that we're probably seeing here, or this optimism, or um, lack of bearish. I'll say lack of bearishness has more to do with a lot of people thinking takeover rumors. I've seen a lot of people talk about Microsoft possibly buying Netflix. Let's talk about that right now. Actually, I was thinking maybe we'll go roll over to something else. Let's talk about Netflix. I don't like the idea of Microsoft buying Netflix. And there's been some articles out there. Let me see. Did I post any in uh well, I was looking at Discord real quick. I had Diet send me Mr. Diet Cola here send me this video. I haven't watched it. I was actually about to watch it before I got on the live stream. Didn't watch it. I'm gonna watch it after this, just because I'm curious on what their point is. Let me see. Did I post anything about the possibility of Netflix or being bought? Now, there's been a lot of articles. I've read. I'm not gonna say a lot of articles, but I've read like 4 or 5, or at least headlines about the idea of Netflix being acquired by Microsoft. And I don't really, I mean, I saw the points that some of these articles were making, and to me, they're not viable. They're not solid points, right? They're not super solid points. They're not solid enough to make me say, yeah, you know what? I should do some position, some bullish position on Netflix to say, hey, because I see that Microsoft has a very strong case. They're making a very strong case that Microsoft should buy Netflix. I just don't see it. Like Netflix is a strong portal. They have probably the best portal brand out there for streaming. I just don't see the where the benefit is, because they don't have content, and Microsoft doesn't have content. So I don't see where the value would be for Microsoft to buy Netflix. They like it's just not a good arrangement to me. The company that makes a lot of sense for me, but neither Netflix or this company, WBD, Warner Brothers Discovery, is big enough to acquire the other. They both have market cap. Well, okay, WBD has a market cap of 22 billion. Netflix has a market cap of 133 billion. So I guess Netflix is probably large enough to go buy WBD. And to me, that makes the better sense, right? A merger between WBD and Netflix. I don't know how that would work out, because WBD has the opposite problem of Netflix, right? They own a lot of content. They own like HBO. They own HBO Max. They own the Warner Brothers stuff. They own Discovery. They have a lot of content out there. They also own Do they own Paramount? I think they own Paramount. I'm not sure about that. I think they do, but they own a lot of content. But they don't have a portal plan. They don't have a great portal strategy. They like once they got spun off from AT&T, they never really had that portal to push their content out there. And this makes so much more sense to me for a merger between Warner Brothers Discovery and Netflix. If they did that, that company would be immediately viable in the streaming space. Immediately viable. Because they would have content. Netflix has the portal. All you do is just take the content and you put it on Netflix. And guess what? There's already been a lot of Warner Brothers Discovery, HBO stuff on Netflix in the past, right? There's been a lot of stuff that has come out on Netflix before. Obviously, those contracts have just ran out because why? Why do I need Netflix when I have the content? I can just make a portal. But they obviously haven't made a portal or a streaming service to get people onto watching Warner Bros. Discovery. So to me, I don't like the idea and the fit of Microsoft buying Netflix. So I don't really like a lot of that talk. Honestly, I've seen some of them. It just doesn't make any sense. Like, are they going to buy them for game streaming? And so you're going to buy this massive company just for game streaming? Like Netflix isn't known for game streaming, so that's another thing. I just don't get it. I just don't get it. I mean, not to say that Microsoft won't do it. It just doesn't make sense to me. Like Microsoft doesn't own content to put into Netflix's portal, right? So that's just kind of where I'm at with that. I just don't see that. So let's go look through the sectors. Let's just move on from that and take a look what's moving, what's not, what's shaking. So obviously we're seeing green everywhere. Past 5 trading days, we've seen mostly red everywhere. We're seeing pretty good rotation into tech. Tech is up, or the XLK is up 1.9%. The other areas doing really good is industrials. Industrials are holding strong really good. This might be a pretty good spot to be in for investing. We can definitely look at maybe some leap plays. I would just like to see a little bit more bearishness come into this sector. I'd rather see it at a lower level, maybe like 190. You know what? Let me put this on here and see possibly where it could pull down to. So if it pulled down to about that 190, 192 to 190 somewhere. Oh man, look at that gap that it had back here. Wow. So yeah, if it break this spot right here, this low back on November 3rd, I think that would be a really good spot. Because mostly I think there's a lot of people probably sitting there. So you know what? I'm gonna do this. I'm gonna put a box in here. Where are the boxes? You know what? You think I know where the boxes are? The rectangle. Thank you. All right. So if it pulled into sometime in January, all the way down to possibly this zone around 88. If it got to within, about 92 to 88, somewhere in that zone, right under this little low that it had back on November 3rd, to the top of like this area where it kind of had this little choppy bottom down here, I would like that. Anywhere in there, I think the XLI would look really good, especially if it gets down in that zone as the market's breaking down, like the regular SPY is breaking down, making new yearly lows. I would really like that, probably in that kind of time frame of January, February, maybe March. That would look pretty good. And I wouldn't get into it as soon as it got in there, but probably as it started to come back out above 92. Kind of a base in that zone, around that $90 zone, and then base, it starts to make its way up and out. I would really like that. So we'll see. But XLI has been holding up really good. I like a lot of the bullishness it's been on. Obviously, it did break down, pretty good over the past several days. I don't like everything else, but here's the thing, is it's already retesting the bottom of kind of the channel that it had been in, kind of like that consolidated area that the market had been in for the past several weeks, right? It's already at those bottoms. And just taking a look at the SPY, well, the SPY's not even close back to there. I mean, SPY's like 6-7 points away from getting back to some of these consolidated bottoms. So you're just seeing there's a lot of strength here on the XLI. And you see the strength, go to the strength. You see the weakness, get out of the weakness. You don't try to fight what the market's telling you is going on. But yeah, looking pretty good there. XLB only up 1%. So we're seeing some weakness really on the XLB because it's among some of the weakest areas. Consumer staples is also weak. So you're seeing a little bit more strength there in the discretionaries today compared to the staples. Staples, even though they're up on the day, they're only up 1%, but discretionary is up 1.9%. So yeah, seeing a little bit of strength here. I'm going to add XLP, not that XLY, XLP. I'm going to add this to this, and that way I can stop typing it. I type it like every time. But yeah, we're seeing a little bit of pop there on the XLY, XLP ratio. And did we get to any major pivot levels? Not really. Yeah, I mean we've just been moving pretty strong in one direction. We're breaking down. We're gonna definitely end this month below this consolidated low. Obviously, we wicked below it last month on the XLY XLP relationship. Obviously, we had some pretty strong wicks back here in 2018. Yeah, I mean, we're just gonna end a very solid candle close. The lowest candle close on a monthly time frame for this relationship since the COVID crash is going to happen this month. Yeah, that doesn't mean anything about a change of trend, one day. So I would expect probably some bullishness to maybe even continue over the next couple trading days. Very solid move in the bearish direction, but I think we're probably going to make a move at least to the 165 area here over the next couple months. And though that relationship might continue to go bearish for a while, as we saw just how extended this relationship got, right? The XLY XLP relationship just got hugely distorted into one direction. So I would expect it to probably come back down into a more normal range that we've seen before the past couple of years, past 4 or 5 years, where we got really, really extended. But probably the next really main area is going to be 160 area, 165. So I would keep an eye on that. But yeah, there's nothing going to change that. So if nothing's going to change your mind on that, I would imagine a lot of stocks that are tied to those areas are probably just going to continue to get hit. We can take a look at Tesla. I know Tesla's just been on an absolute, getting flushed through the toilet type of mode here recently. So we'll take a look at that. XLC performing in line with the market, not really doing too much. XLE is also a top performer of the day, actually the top performer of the day. So we're seeing pretty good strength here out of energies. We were seeing some pretty good strength out of RB, right? RB, which the RB, gasoline futures. We're seeing pretty good strength there over the past couple of trading days. So, okay. We're seeing a lot of things kind of go counter to what's been the move over the past 5 trading sessions or so, 5-6 trading sessions. So, nothing too crazy going on. You'd expect a little bit of retest, a little bit of rotation. It's just the way the market works. Just the way the market works. Financials are kind of in line with what the market's doing. About 1.5% up. Healthcare, a little bit on the lagging side today. So it's definitely a little bit more of a risk on day today. Yeah, I've seen a little bit of bullishness on the market. All right. A little bit of a risk on day. Mid caps, man. Mid caps holding strong. Okay. So let's go look then at TSLA. Oh my gosh. Did Tesla finally find a bottom? Kind of been mentioning for a while. Just watch out for this cluster that it put in back in 2020. Nice little cluster here. We've seen a lot of selling. Yeah, I've been bearish on Tesla for a while. Obviously, I haven't had a position. I haven't had a position on it for a little while, just because the options are so dang expensive. But I think it will probably wind up making its way down to 65. I think that'll be the eventuality of it. It's just right now it's just really, it's going to be very choppy. It's not going to bottom anytime in Q1 or when the market kind of bottoms. It'll probably continue just to trade lower. People are going to be like, man, Tesla's dead. They're going to face a lot of competition. And then there's also, I just saw yesterday, let's see if Finance has it. I think yesterday there was an executive poll in the auto world about um, executives. Yeah, just executives in the auto industry are not as aggressively bullish on electric vehicles anymore. Let me just pull up like Ford or something, see if it's there in news. Electric vehicle adoption. Okay, U.S. electric vehicle adoption outlook fell 30% in 2022. So, yeah, I mean, that's kind of along the lines. Not really the one I was looking for, but yeah, it's gonna be just one that I was really just looking for one. Okay, here it is. Actually, it's a smaller one right here. Auto execs are losing faith in electric vehicles. That was what I was looking for. So yeah, it's one that I mean, if the auto industry doesn't have a strong outlook for electric vehicles, obviously the electric car company or the company that's mostly tied to electric vehicles is it's gonna continue to get hit. TSLA, right? So I would just expect more bearishness to kind of come out of this, and if they can actually improve um, two main areas: public charging networks, kind of like how we have gas stations, right, for internal combustion engine vehicles. If they can improve the public charging network and battery technology for electric vehicles, those would be the two main areas I would say. If they can really get those two areas locked in, I would be bullish on electric vehicles. But for how large of a valuation Tesla got, there was no way I was going to be bullish on it. And I've had a lot of bearish plays on it over the past couple of years, but the options there are just so expensive, just too expensive for me. If I do play it, it would be with verticals. It would be with verticals. I would not play this with just a directional put option, or even if you try to play with a call option, just so expensive on the option side. So that's sector performance. All right, so seeing a little bit of that risk on. Let's just take then a look around, see what the big dogs are doing. Microsoft not really having a strong day. I mean, they're up pretty good, up 1.3%. So they're under what the market's doing. So that's interesting. Alphabet only up 1%. Okay. Man, yeah, okay. Amazon Amazon up a little bit more in the market, up 1.9%. So that's interesting. If we continue to see these big dogs continue to lag on the market now, looking at AAPL's up 2.5%. Obviously, it's leading a lot, but it got down into a zone. We're going to start to get a lot of people kind of buying. And this thing did sell off really strong from last Tuesday's high. The market did not sell down nearly as much as this. This thing sold off 13.3%. The SPY did not sell off nearly that much. The SPY, and we'll take a look at the Qs, right? The SPY sold off 7.9%. The Qs sold off roughly 10%. 10%. And you're telling me AAPL's down how much? What was that? 13.3% or whatever? So yeah, 13.3%. So yeah, we seen some real bearishness on AAPL, so it just makes sense that we see a little bit of a snapback today. But yeah, that ain't changing nothing for me. That ain't changing nothing for me. But yeah, we keep seeing though, Microsoft, Alphabet, Amazon, kind of lag on the market. Yeah, it's not going to be good because I mean they have so much waiting out there. They still have that much waiting out there. Ooh, sorry for that brightness. That was even caught me off guard. What is down? Let's find out what is not working today. Monsanto, or is that Altria? That was Altria, right? Yeah, it's Altria. Um, that is not a bearish. That is not a bearish. That is not a bullish gap. That is not a bullish gap. Very nice little consolidation here. We even have a nice little. Let me get in closer. We even have a nice little, even shorter term, little flag pattern here over the past couple trading days, and then we gap them below all that. Not really the best look there. Is there major news about this? Nope, not really. Did they pay a massive dividend? I mean, that's a dividend gap. That is a dividend gap, pretty much. I mean, they gapped down. They paid a 94-cent dividend, and that's pretty much how much they're down, right? They're down 87 cents. So that's pretty much why they're down about that much. Man, you got to watch out on those dividend gaps. They break down certain technical levels. The stock price could still go bearish. Yeah, that is not looking the best there on Altria. Yeah, that could be a little bit rough. Let's check out crude oil. We'll check out some of the energy stocks. So, crude oil. All right. Crude oil for now looks like it has based. I'm not going to say it is done being bearish, but yeah, you got to like some of this, at least consolidation for now, and then breaking some of these trend lines. It's gonna probably just at least come to the 50. If it breaks this one, this pivot area around the 84 area. Yeah, it would probably be done being bearish, but I don't know if it's gonna break that. I would say crude oil is kind of a hands off for now. Hands off for now. We're seeing the same kind of follow through on gasoline. Gasoline still seeing that follow through, but not really seeing as strong of that follow through. So interesting. What are you doing, Rose? How are you? How's your day going? CCL, Nike bounced after. Yeah. I definitely saw that Nike move. Definitely saw that Nike move. Let me run through energy stocks. Continue with the energy thing. We'll check out CCL, Nike, and MU. See what MU's are doing. See what other some of those other semiconductors are doing. I saw your video, by the way, about Micron and earnings. But Exxon, nice little lower wick retest today. Gap up, sold off, and then just bounce. Nice. That is very nice. Man, that says it wants to be bullish, but I don't know. It might just wick higher here the next couple days and come right back down. Yeah, it might just retest up into like some of these zones around 109.50 to 110. I wouldn't be trying to be bullish on energies right here. On energy stocks. On energy stocks. Yeah, that's looking pretty good, though, for the next follow through the next like day or so. Okay, so that's Exxon, Chevron, ConocoPhillips. Yeah, a lot of it looks very similar. Nice little double bottom type action. BP, VLO, MRO, MPC. Yeah, they all look about the same. That kind of like double bottom action. All right. Okay. All right, let's move over to CCL. Oh yeah, look at that. Nice gap down. That's what you want to see. You want to see gap down, and you don't want to see gap down, but you just want to see intraday buying. You want to see people buying the stock. That's what you want to see. You want to see people buying the stock. That's not bad. If it breaks that 780 level, though, watch out below. Be a sinking ship. Take all them investors down with it. Wow, the buying came out immediately. All right. CCL looking pretty good. That's Carnival. What Royal? What's Royal Caribbean? Royal Rivian. There. I don't know why, man. I couldn't think of RCL. I was like, no, whatever. Brain dead day, I guess. Um, I like this price action. This kind of tells me that cruise lines are going to go back into the bearish direction. I know CCL kind of has a lot of momentum off those earnings, but it did have a little bit of that upper wick. It just saw so much buying in that first like 20 minutes, but this gives you a little bit better indication, right? You're seeing that buying. You saw a little bit of that carryover to RCL, but then people are selling it right back off throughout the day. So I think CCL is just seeing a little bit of that, just that momentum off of earnings, but you're not seeing that same kind of carry and follow through RCL. In CHL, in CHL, right? What is NCHL? I know it's Norwegian. NCLH. You tricked me. I knew it was Norwegian. Yeah. This is the problem with too many stocks out there, right? Same kind of thing, right? It's not quite getting back above. It's been pretty good bearish trend. Like, this is probably a pretty good selling opportunity. I would wait here on the market over the next couple of days. But yeah, any kind of bullishness that you're gonna get to continue to like retest higher, I'd be selling it. I think the market will probably still be bullish here over the next couple of days. But I don't know if it's a big game changer. Nike, yeah, Nike's gap up was massive. But people were selling it. Man, that is just a monster gap on Nike. Oh, wow. Back above last Tuesday's high. I mean, people selling that sucker. Like, yeah, no. You're not going to rip out of here that easily. Expect Nike to be a little bit bullish here over the next like day or two. Obviously, when people read the news headlines, oh man, Nike was up 13%, they're going to come back in tomorrow and the next day and kind of buy it up a little bit. So Thursday, Friday, kind of thinking maybe a vertical spread. Maybe. Take a look at that here in the next like 10 minutes or so. Yeah. Yeah, I think I might dig being a little bit more bullish on Nike here over the next day or two. All right, Micron. Man, what was that? Yeah, I know there's a lot of mixed. There's a lot of mixed. Dang, I hate being bearish on. I'm not gonna be bearish on it just because, man, how much it's sold off. The play would be other semiconductors. If other semiconductors set up really good, Nvidia might be it. Honestly, Nvidia might be the best play to be for a potential gap down. Micron, not so much because it's already sold back down to kind of the lows on the year. Nvidia really hasn't seen a lot of that. AVGO also hasn't really seen a lot of that. And if you get a little bit of a gap down on these guys back below this low, it'll probably just flush. But man, they've been pretty strong. Intel has not been strong. Intel's not been strong. But it's in a long-term kind of buying area. So that's going to be kind of tough. Man, the only one that's kind of in the middle area is AMD. Is this one. Yeah, I'm trying to think. Really, if it doesn't look good, I don't want to do it. But I could see, you know, TSM weaker. Yeah, I could see semiconductors starting to lag here the next couple of days, and it might start with Micron's earnings. Let me pull over. Um, I wouldn't play today, so don't look for me. Oh no, I'm looking. Oh, I'm looking. I'm gonna I'm gonna be super creep. I'm gonna look super hard right now. Um, let's see. Let me pull over. I just want to see if AMD has 50 cent strikes. I might look to do it, and I'm gonna be really tight with it. Come on, man. Thank you. Etsy. I was looking at Etsy. I kind of dig the possibilities of Etsy bullish if we continue to see the market sell off in Q1. AMD. All right. They have dollar strikes. Man. All right. Got to think about this. I got to really think about this. I don't mind being bearish on AMD. Micron's tough. Micron's tough. Just because of it gaps down, it might just get bought right back up. It might just get bought right back up. AM. Oh my gosh. AMD. AMD though. It'd be like it'd have to be like 167 by 166. That's about. All right, let's take a look. What's that risk reward look like? Oh man, that is really good. Vertical. It's not bad. I dig it. I dig that. I dig that. 'Cause I think we've seen a lot of bullishness today on the market. A lot of it looks like it's coming in this form of semiconductors. Right? What's the XSD up? XSD's up 2.5%. What's SMH? SMH. I'm learning. I'm learning all these other semiconductors. The other thing is we're seeing a nice little retest higher, possibly into that previous low that we had back in November. So on November 17th. SOXX. Yeah, even socks even retesting a little bit higher. Yeah, I dig it. Jeez, stumbling over words. I dig it, and the thing I'm gonna do here is I'm gonna do two. Right, I'm gonna do two. I'm gonna do bearish on Nvidia, but I'll do a bullish one on Nike. Okay, hoping one of them wins. One of them, or I'm hoping both of them win. But if one of them wins, okay, it just kind of offsets the loss of the other one. Not a really big deal. But Nike, kind of where it's at, man. I'm definitely counting on some follow through here over the next like day or two. If it doesn't, then it's okay. It's all right. It's not gonna be the end of the world. But yeah, if people come out and drop on earnings, then AMD will probably drop as well. But AMD obviously broke down below, and AMD was selling off before the market really sold off from last Tuesday's gap up, right? And AMD just retesting right back into this low that it had here. I dig it. I dig it. Now the real question is, if it gets below 66, would it go to 65? Yeah, I could see that happening. I can see that happening. 66, 65. Let me see if that risk reward is even like what that risk reward is. Good grief. 66 by 65. Yeah, I dig that even more. Honestly, I really do. Oh, good grief. I'm gonna try and I'm just gonna go and do this for 20 cents. I'll do this for 26, 66 by 65, and then I'll go look and set up Nike. Basically, just kind of hedge. this if the market pops then tomorrow and Friday, which I wouldn't doubt it if it does, just because I was counting on a little bit more of a retest here as we went into the rest of this week. Just because we sold off a lot over the previous like 5, 6 trading sessions. That Nike just kind of offsets this loss, but if the market turns over, this would be a big winner. This would be a big winner. So I dig this a lot more than some of the others, I guess, out there in the semiconductor world. But if Micron drops on semiconductors, I mean, they're all going to drop. AMD probably drops. AMD's been lagging pretty good over the past couple of weeks. So yeah, I'll just go ahead and hit this. 20 cents for $1 win. Not bad. Not bad. So yeah, I'll go ahead and hit that. 66 by 65. And you're counting on really AMD getting back below today's open. Really today's low. Right? If that happens by Friday's close, I have no problem that it'll probably come back down to 64. Probably the weekly low. Yeah, I like the retest on some of this stuff. Looks pretty good. Let me see. Man. Getting grief. Got to change the volume a lot here. Are you gonna? All right, there we go. All right, got filled at 20 cents. Yep, got filled at 20 cents. Gave me nothing extra. Gotta love that. Thank you, market. All right, so that one's in. Let me go right there. Boom. Settings. 65. Style. Not that. Template. This is going to be the target. Boom. All right. So 65, which basically if it gets below today's low by Friday, I'd imagine it probably continues to follow through going into the close. Probably makes me run down to 64. So let me add this to the list so I can watch it for this week. I will not get exercised on one side this weekend. I will close that out. Nike. Let's see what you've been doing intraday. My gosh, man. Yeah, I dig it. I'm okay with that. Let me pull up Nike options. I'm taking a look at that. Oh, man. All right, Nike options. So we got NKE. If we continue to have some follow through here over the next day or two, I wouldn't be too worried that we don't see some kind of follow through. Does it get back over 107, 117, 118? What was the high today? 119. That'd be kind of pushing it. But I'd be okay with doing a 118 by 119. I'd be okay with that. Let me see. Let's mess around with some of this. Yeah, I'd dig that. 118 or 119 for 30 cents. Yeah, I'd dig that. So that would be the one I would do. Let me see. Let me see before I say yes. That's what I'm going to do. Yeah, I like the risk reward or the reward to risk a little bit better on 118 to 119. What was 117? I like it a little bit better 118 to 119. Yeah, just a little bit better. I dig that. If basically you're saying by Friday it gets back above the today's high, I can see that because I can see tomorrow we actually go up like another 1.5%, and then maybe a little bit more follow through Friday, getting back above 119. So yeah, I could see that happening. So I'm gonna hit that 118 by 119 call vertical, and if AMD works out, cool. It just kind of offsets the hedge on Nike. If it works out, it offsets the loss on AMD, that kind of thing. So they just kind of hedge each other. if we get just the market to move, just all the market to move in one direction. So let me hit this real quick. And that'll be that. Oh my gosh, having to adjust the volume a lot more than what I thought. All right, one more. Okay. So there we go. Actually wound up getting filled at 32 cents. So I'll go and add this to the list. Yeah, I didn't want to play Micron. Just didn't like. Micron's been sold off pretty good, so I can see it gapping down, getting bought up a little bit. But you know, if Micron gaps down and AMD and some of the other semiconductors kind of follow, you know, those other semiconductors might not get bought up just because they won't be back at their yearly low, and I can see them being a little bit weaker through the rest of the week. Micron might not though. Yeah, I dig this play on Nike. So there it is for this Friday. AMD, Nike, kind of looking to maybe offset each other, and we'll see how it plays out on Friday. Not gonna count on anything though. Yeah, there you go. Basically, just count on Nike, follow through Thursday, Friday, continue higher a little bit for now. Probably definitely at least continue to see a pop tomorrow, maybe up to like 118. And if it just follows through, then gets above today's high, I'd imagine it probably stays there by Friday's close. AMD is kind of a little bit more of a play on Micron's earnings, but AMD's been pretty weak. Or a little bit more bearish than a lot of the other semiconductors, especially ever since we got into the month of December. You know, we saw a nice breakdown, you know, back on December 6th. And then even after that gap up, you know, AMD sold off 15.5% to yesterday's low. So just expecting a little bit more of that continuation as it started it basically back in the beginning of December. Just kind of retested right into the low, you know, back on December 12th. Right into that bottom. So, yeah. You know, if it works out, it works out. It's a pretty high reward, pretty low risk play. So, yeah, nice little setups there on AMD and Nike. Uniforms. Cintas? Is that CTAS? Yeah, Cintas, yeah. Yeah, I could see this. Oh man, that is not a lot of volume for this company. Yeah, I know they are a pretty popular company for. So what that kind of says, if they're seeing business increase, that really kind of says what that kind of says to me is people are coming back into the office. Not that the labor market is super strong, but that people are coming back into the office. I really like this. You know, it had a very nice move higher. It's been in really a very nice consolidation. It did not make a new low back in October. I like this thing bullish. I really do. I like this thing bullish, man. I mean, look at this inverted. Look at this inverted head and shoulders action right here on a monthly time frame. This is a super long term. New head, neckline, shoulder, breaking out. Basically, just retested right into that neckline. I mean, that is super good. I mean, I would be bullish. Yeah, I'd be bullish. I mean, that chart pattern looks super nice. And you're saying they boosted outlook? Yeah, I mean that thing looks good. That is a solid looking. That is a solid looking chart. I would be bullish on it. I would not be looking to be bearish on this at all. Not at all. That looks great. Yeah, they are making money. Check this sucker out. Operating cash flow took a little bit of a hit. So that's interesting. Yeah, that's interesting. I wonder why that is. Q1 of 2022. Like you wait, what? That the latest earnings that they got is Q1 2022. I mean, that was like 9 months ago in here. Let me go to Finance Yahoo. See, what was it? AS, CTAS. Let me look here. Financials. Where's quarterly? There we go. Yeah, I wonder why. Yeah, TradingView doesn't have updated quarterlies for this company. They have Q1s, but like Finance Yahoo, I mean Q1 was this one. They should they need to get on put in Q2s, Q3s. Yeah, I mean, let me see cash flow. Operating cash flow. It's been rising. It definitely had this drop. Good grief. Hold on, defaulted back to annual. So trending higher, 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 and then it dropped off. Yeah, so it did drop off. Interesting. So hold on, are they really? So Finance Yahoo's saying 2.8, uh, basically 300 million, 300 million. And then let me see what did this say? So this is so okay. So why, man? All right, whatever. So that is Q1. That is Q1. That's just really weird. I don't know why this is displaying Q1 is like the end of August. All right, whatever. But yeah, that's interesting. I don't know why operating cash flows. They've been having a very nice steady stream into the positive direction. This might have just been an overcorrection, right? They had a really high operating cash flow last quarter, and then it just kind of came back down to back into the more normal range, around the 300 million. So it's probably nothing to be a big deal about, but just kind of an interesting note. Everything else looks really good. Everything else looks very uniformed throughout the past several quarters. I dig this, man. I dig this. This is solid. They're just churning it out. I mean, look at the income's increasing. What does the annual look like? Profit margins really ramped up over 2022. So I wonder what they did from 2019 to 2022 to increase that profit margin. That's been very impressive. I mean, operating cash flow annually has been increasing over the past 5 years. That's what you want to see. I dig this, man. I dig this. This is a good place to probably go hide out. CTAS. Related PayX reports before the open KMX. Okay. Let's check those out. Yeah, that might be a really good play to go. This might be a really good spot to go hide out. Really good spot to go hide out. Okay, you said PayX. Oh, Paychecks. Paychecks. Just looking at a weekly chart here. I don't like it. I don't like that weekly. Technology services, data processing. All right. I don't like anything really tied to tech right now because I think that's where we're going. There's probably just going to get continued caught up in that tech sell off. So if they're just caught up in like that tech area, they're just in a bunch of tech ETFs. Then that's basically what that says. So they're going to continue to get kind of hit with that. KMX. Cintas, though, looks great, man. Cintas looks fantastic. Oh, CarMax. CarMax, man. I haven't looked at CarMax so long. I would not be. Oh, man. This is basically a play on used cars market. I wouldn't be bullish here, but yeah. ADP, close competitor. Looks a lot better. This looks, yeah, ADP. I haven't looked at ADP in a long time, but this looks better than PayX. PayC. Interesting. It's an interesting play. I'm not gonna say bullish or bearish really, but the thing I do like about it is you had a pull down, you had a little pop here, you had maybe a head, maybe a little bit of a higher neckline type possibility, a little bit of a higher shoulder play. So if this thing could push back up in this direction, back in the bullish direction, get back above 400, yeah, I mean I could dig this, but right now it's kind of like in that middle area where it's like no man's land. Did it just like have a pop here and break some of these kind of stop losses that were probably sitting above these wicks, and then it continues back in that bearish direction? It'd be interesting. Paycom software package. The thing is I don't like package software. This is a sector I don't like seeing. I don't like seeing package software. They've been hit really hard over the past year and a half, and they, even though they've held up compared to a lot of other packaged software type plays, but yeah, they've been on a freaking run. I don't really dig it all that much. Just looking at that monthly, like just such a trend move that, I mean, just looking at this monthly, it looks like it just kind of came down, bounced, and it looks like it's about to just slowly roll back over. Yeah. CRM. Man, that thing got obliterated. I would stay away from PayC. This looks more bearish on a monthly time frame. This thing looks like it's about to just slowly break down and just continue to roll over. Not to say it's a bad company. Let me look at their last earnings. What was their... Yeah, it's not a bad earnings. Just technically the stock chart just doesn't look the best. CRM. Salesforce. It didn't go anywhere. It's still there. Still making a lot of money. That's the thing, man. It's just like so many companies just got super hugely overvalued over the past couple of years. You're just seeing that comeback moment, and that's packaged software. You know, they're probably they're not the big daddy of packaged software. I mean, that's going to be obviously Microsoft, but Microsoft has a lot more diversification into areas that are going to be going into the future. I don't really see that with Salesforce. That's probably a big reason why they've been getting hit pretty good. I mean, they're getting back down to COVID lows. I'm not saying that Salesforce is a bad company, but I wouldn't like just packaged software in general. I don't like anything in packaged software except for Microsoft, because they have so much diversification in areas that are continuing to be growth areas in the future. That's about the only thing I can really say about that. But like a lot of packaged software has been getting hit so much over the past year and a half. Salesforce actually held up pretty good throughout 2021 compared to a lot of its peers. A lot of other packaged software was getting hit so hard in 2021. That's where a lot of that stuff started selling off in 2021. I confess, bearish puts on Snow. Okay, Snowflake. All right. What was your timeline? When did you get in? What's your outlook? Time and price targets. TPP, man. You need to have TPP. Time and price projections, time and price targets, TPT, whatever. You need to have one of those. I've seen it called both things, but yeah, I know people were like all up in the deal about this thing, Snowflake. Let's see. Are they profitable company? They are a profitable company. Let me see earnings. Earnings. They have had positive earnings pretty much for the past calendar year. Okay. You have Feb 17, 115. All right, there we go. Feb 17, 1, 117, 115, 115, sorry, 115 puts paid 480, too close to expiration. Actually, I think it's an okay play. Um, so you're sitting. All right, let me mark that. Where is the circle? So Feb 17, 115. You're basically right there. All right. So, but you paid 418. So you needed to drop down to basically 110. You need to get to 110 or lower. That's your break even. So your break even is 110 or lower. All right. That's interesting. So you really need to watch and make sure as the market weakens here. So it bottomed back in June, kind of like Apple. This very much looks like Apple, honestly. It looks like AAPL, except for recently. Recently, it hasn't been breaking down recently as much. How much did it sell off from last Tuesday's high to the low it put in yesterday? 17%, but it's down 11%, 11.5% currently from that high. Interesting. Okay. There's some positives here to be bearish. I like it in the bearish direction. Basically, you're counting on it to get back to its yearly low for 2022. I could see that happening. I really could. If you get a market liquidation event, kind of like what I expect we probably will have in late January, February, this could probably play out. What was your price target? Where were you thinking it was going to get to price wise? I guess that is my main question. But I mean, I dig it. I think it'll probably play out. You would really want it to make this move in January and not February. February's cutting it really too close. 110, 116. So here's the thing. So 110, 116. I mean, you don't want to buy options in the zone of where you expect the price to get to. I okay. I don't like to do that. I know some people do, but if it got there by like in January, I would say just okay, just take them off the table. I would have said cut the difference in half, like where it is now, where you expect it to get to. So if you think it's going to get to like 110, if it's currently at like 140, cut that in half, say 135. That would be a good option to go by. 130. 130 would be a good option to go by. Just cut that in half. Wherever it is now to wherever you think it's going to get, cut it in half. That's where you should buy options. That is statistically the highest profitability option. The next part that you need to understand is your time projection, right? Time projection. Man, time is the tough one. Time is the tough one, honestly, because I don't freaking know how long it's going to take to get there. So that, I mean, you have so many expirations out there. The buying the price is easy. I mean, that's easy. I mean, like I think I'm pretty confident it's going to come back down to this 110 level. Actually, I'm with you. I'm pretty confident it's going to come back down to that yearly low, that 110 level. But by when? That's the problem. By when? February. That's cutting it a little close. I wanted to avoid the Feb earnings too. Okay. What might happen with snow? What might happen here with snow? And I could see this happening. This thing's selling off and being like it's death. Like death, maybe even breaking this low by then, if it does. and then earnings come out, it gaps down, and everybody buys it up. Like, hey, they have real problems, but it's not like it's the end of the world kind of problems. Maybe they just miss earnings, but the company is starting to maybe like turn in the positive direction, and they gap down and they get bought up. I could see that actually happening on that earnings, just because I think we'll be close to a bottom then. And if we bottom before then we start to rally, maybe that earnings just kind of pushes it higher. But yeah, I mean, I could see kind of wanting to stay out of those earnings, but there was no wrong, there was no problem with going farther out in time, like April, March, April, May, or somewhere out in here, with your expiration. Maybe like April, May. Yeah, I would think maybe more April, May, and giving yourself plenty of time, right? If you're thinking, hey, you know what, I want to see this move by February, just going out to like April and June, April, May, and just saying, hey, I want to see this move by June. And if it happens by in February, that's fine. Then you just close your position, right? But man, I mean, that's just so close on expiration that, man, you're going to be biting your nails. You're going to be biting your nails as we get into probably late January, February, if it's just kind of like hanging on into like that 120 area. Yeah, I know. I used to bite my nails a lot. I don't have nails anymore. I have nubs for fingers. Yeah, this is gonna be tough for like that January February time frame. Really will. The other kind of there's two ways I kind of look at buying options. Okay, I look at two ways I directionally look at buying options. Halfway point between stock price and my price target. So you have a very good price target. I like the price target of 110. I think buying like the 125 to 130, that would have been the better options to buy. The other rule of thumb for like the expiration side of what expiration to buy. One moment, teaching moment. Yeah, I get you. That's about the best way to learn. It's just kind of like, okay, what does that option work or not? The other way, though, to kind of help narrow down the expirations is give yourself an idea of when you think this is going to happen. Now, some of it's going to depend really on the market. Like, what's the market going to do? Because if everything kind of get caught up in the selling on the market side, right, then everything's going to sell. I mean, everything's going to sell. Just some things sell more than others. And when do you think that selling is going to happen, or when do you think those moves are going to happen? Whether it is on a stock or the market, and the stock just gets caught up in the market selling, those are things you need to kind of consider. But if you think the selling is going to happen in February or maybe in the beginning of March, you want to take where you are now. This is kind of just the general rule that I have. There's no like perfect way to do this on the expiration side. But take where you are now. Say, hey, you know what? I think it'll happen by February. So that's 2 months. Double that. Okay. If you're thinking this is going to happen in 4 months, double that. Go out 8 months. Right. Give yourself plenty of time to see that move, because man, that time, it freaking sucks. It sucks. It's so hard. You want to give yourself plenty of time to see that move, and you don't want theta to destroy the value of your option before you can see the move, right? If this thing just kind of hangs out and just chops around, but it starts to move in your direction, but it does this and then it drops off in March, April, if it just kind of slowly chops, it's moving in your direction, it's going to keep you in it, because it's like, oh man, I'm right in the direction, but I'm not right on the time. And that's where if you would have done like April or May options, you would have been a little bit better off, because you would have then saw it later. Like, this is what happens, right? We looked at this a little bit yesterday on the market. It just kind of has these like slow churning and burning. It's really hard to be bearish on the market. So make sure you want to give yourself plenty of time. So whatever your time and your price is, that's kind of the way I would say. Make sure you come up with a time and price projection, or time and price target, whichever. I've seen it called both things. And then, for your price, you kind of want to cut it in half. Whatever your price projection is, cut it in half for your strike price. your time target, your time target, you want to double that and go with that for your expiration. So like, you have a 2 month kind of time target here. You want to go out to maybe like April, maybe even May. It's kind of hard being less than 3 months. You typically want to stay away from options that are less than 3 months. And I get it. Options are expensive, like the farther out in time you go. But remember, the farther out in time you go, the less they are expensive per day. That's a very important thing to understand. And just look at it as like, you know what? I'm gonna loan the market my money on this put for now, and then I'm gonna take back my loan later on. Right? That's kind of the way you need to think about with theta. Theta's a son of a gun to learn. But the only way you really understand theta, get in and start playing around with options. And don't be over leveraged when you're learning. But yeah, those are two very important general rule of thumbs I have for people when they like start to learn options is like their price, cut it in half, go with those strike prices, and then your time target, double that, and go with those expirations. That kind of helps narrow the field because there's a lot of options to kind of go with, right? Yeah, see, I sort of forgot a little. Will probably happen next 2 weeks. Yeah, you're good. It's part of the learning. Just don't, in the learning, in the beginning part, just make sure you definitely understand your risk. Don't overbuy on anything. Um, don't over risk your account. There's no need. The market's going to be around a lot longer than you can remain solvent. Just stay solvent. Stay solvent. Okay. I've been thinking about XLK or Q puts since I sold Apple puts. Could wait for Apple to bounce a bit and reload. Yeah, this is what I'm going to say about that. It's not bad. Let's take a look. Qs, XLK, AAPL. Why is this on this chart? I don't know. Go away. The thing I will say is look at the comparison between last Tuesday's high to the low that they all put in yesterday. And which one is down the most? That's the one I would go with. I already know that answer. You probably know that answer. That's the one I would go with. We'll see what happens on Micron earnings. Obviously, a lot of people are going to be looking at Micron earnings. If they have a good earnings today after the bell, it's going to probably help lift tech. If they don't have a good earnings, today was probably the good time to get bearish on tech. Unfortunately, you could also take the opportunity to maybe, just go bearish on Apple today. There's not really much upside here on AAPL though. You got a lot of resistances you're about to hit right into the 10 exponential moving average. You got a lot of resistances up here. So if you want to just layer into it, you can layer into it now. If it pops a little bit more, you also got this downtrend. So there's a lot of really good reasons. The biggest reason why I'm bearish on Apple is how large of a company it is, how large it is. A lot of the other tech areas have not been hit nearly as much. Recently, they've already been hit, right? They've already been hit. Alphabet, they've already been hit pretty good. They're down 40%. This is Alphabet. They make cash. They make a lot of money. Amazon. Now, I'm not gonna say Amazon is nearly as quality as Alphabet, but they're down 55%. I'd rather be in the area where a stock is going to go down or the asset's going to go down. Microsoft's down currently 30%. They got down like 40%, I think. Let me see. How far did they get down to the low? 39%. 39%. Alphabet didn't even, AAPL didn't even get close to those numbers. They had a pretty good sell down earlier, 30% down, right? They're not nearly 40%, and they're currently 25% down, 26% down now. You know, this thing is not nearly as beaten up as the others. So I would rather be in something that I think is going to be a lot more bearish. I think Apple is going to be bearish a little bit past the bottoming of the market. I do think that. Not to say that when the market bottoms, probably in maybe February or so, February, March kind of time frame, February, March, April. Not to say that Apple's not going to see some strong buying. Sure, they probably will, but I think they'll probably have like one more rollover moment before they get back to going bullish. But yeah, it was a real bummer that you sold out of AAPL puts. But yeah, that's, look at it, man. Talk trading all day. That'll do it for me though. Rose, it's always a good chat with you. I'll be back here tomorrow. We definitely want to see what happens, obviously on the earnings after the market. See what happens with Nike, Micron, and then we'll see what kind of falls through here over the next couple of days. I do think we will still continue to see the market push a little bit higher. I would expect 3-4 days of bullishness, and really we've only seen 2. We saw buying yesterday. We saw buying today. I would expect 3 to 5 days of bullishness. So, probably do we gap down, trade lower, and then probably rally towards the end of the day, and then continue to push higher Friday, and then, probably next Tuesday next week? Yeah, probably. That's probably what I'd expect to see. So, Alpha Hunters, y'all take care, and we will chat tomorrow. Alrighty. Take care, everybody.